a phase where we simply are confused about where we are. Some people might say, hey, we've topped out, so we are in a bear market because of the 4-year cycle. But are we actually seeing a 4-year cycle? I disagree. I think that we're just seeing lengthening cycles.
Welcome to the GoldRepublic Podcast. My name is Bart Brands.
And I'm Alexei Jordanov. In our weekly podcast, we invite guests from all over the world to get valuable insights
into the emergence of a new monetary system through the lens of precious metals, cryptocurrencies, and other financial instruments.
Welcome to the GoldRepublic Podcast. Today we have the honor of having again Michaël from the Poppe, if I pronounce this correctly. Yeah. Very good. Close, my Dutch is improving. You can see that since the first time, right? So for those who don't know, Michaël is for a couple of years already trading heavily in the cryptocurrency market. You also did stocks before, and you have also a huge following, right? That makes you kind of a famous influencer, as some would call you, on YouTube, Instagram. I think you have above 500k followers, almost 1 million on YouTube. It's going quite crazy.
150k on YouTube, right?
Yeah, 500k on Twitter.
I'm inflating your numbers.
I'm talking in future.
Just like the central banks, I'm inflating your follower number.
Well, let's buy some.
I hope I'll get rich just saying this. Anyways, so... so the last time I think we talked was a couple of months ago, and we were kind of like going towards downward.
Same as right now.
Yeah, exactly.
We were talking in the summer.
Yeah, in the summer.
It was actually the day that Bitcoin broke 40k again on the upside.
Oh,
so
it
was
August,
that
somewhere
day.
in July, August, after the crash.
After the crash, yeah.
After the crash, exactly. We had one before. There was, I think, at peak almost, or before peak. No, it was before peak, before the breakout. We always go manage before breakouts somehow. I think it was in February.
Yeah, it was running already. But last time was after the crash.
Yeah, exactly.
And now we're also somewhere down.
We're crashing.
Coincidence? I think not. Anyways, so. When we look, we're December now. We're like more or less mid-December by the time this will be released. So when we look back at the year 2021, how would you best describe it? What's in which phase of the, let's say, crypto market cycle are we in, and how did this year perform compared to previous years?
I guess the right word is mental. Like, the year has been absolutely crazy when it comes to crypto, but I guess almost every market, the returns since March 2020 are just ridiculous. I mean, Bitcoin has been 17xing since March 2020. The bottom was 3.7k and we touched 69, so even close to 20x. So this year has been absolutely retarded, to be honest. On so many levels.
Okay, retarded. 2021, absolutely retarded.
Or you're gonna make like a summary out of this year. You can't really do that.
Yes, and we also have to think back about maybe the monetary setting, the fact that also through COVID, through highly, let's say, quantitative easing intensive programs of central banks, inflation, but also, and that's maybe the main point and differentiator, the structure of the market itself within the cryptocurrency market. And a lot of people still have, let's say, the knowledge or the experience of the pain from 2017. And now we want to maybe bring it back to, let's say, rewind it 4 years ago. What has changed and why is this bull run different than the one in 2017?
Well, I mean, like in the beginning of 2021, we broke out with Bitcoin. That was the first trigger. But the actual trigger is probably the expansion of the entire ecosystem. It is not about Bitcoin only anymore. It is about building products, financial instruments that we can actually start using in Web 3.0, the new internet. And that is a difference from the previous cycle, is that we are finally developing those products. And that's what we are seeing the entire year. We have seen Bitcoin run up, we've seen Ethereum following too. After that, we have seen the expansion of other platforms trying to build the exact same, because Ethereum facing some issues, which they are still facing. We have seen NFTs bouncing up or starting to get into a hype momentum. We see the metaverse. It is all different stuff that we have been seeing in 2021, that's why this year is so crazy. But Ethereum, like the entire ecosystem that is growing so fast, makes the market more complex and way different than what we've seen in 2017. That is, I guess, what we have in 2021 right now.
Mm-hmm.
So this year, as you probably very good described, was totally retarded.
Mm-hmm.
And how does that compare to your own experience of not only the year in crypto, but also because you just blew up in 2021. You had
Gained a lot of weight, yeah.
Retarded. You became retarded in 2021,
No.
just like the market.
You had a very consistent following up until the last couple of years. You had a hardcore following that had people that have been following you for years, but now it's just mental. How was that experience for you? So how did you experience yourself, not looking at the markets, but looking at Michaël from the Poppe as a person and as also someone that trades the markets and is developing his own company?
Well, like the actual reason why my account and some other influencers, well, I hate the actual word, but it's actually finfluencers in the Netherlands, right? Financial influence.
Wow.
Yes, famous. But like all those accounts have been growing quite fast, and also some stock market accounts have been growing quite fast because of the interest and attention the markets are getting nowadays. You see advertisements everywhere on billboards. You see advertisements everywhere at football matches, on TV. And the inflation topic has become quite central. The majority of the people are currently discussing it, so everyone is investing in anything. That's why my account started growing too. So that is one of the primary variables. Yeah, how do I enjoy it and how did I feel like... Well, the first real times that you walk around and people are wanting to take a picture with you, it's kind of awkward. Especially when you're walking around in Dortmund enjoying a match, Dortmund-Ajax, and people are constantly asking for a picture while you're drinking beer. You're like, yeah, no.
No way.
Yeah.
You were watching a match in Dortmund and people recognize you?
Yeah, that was the craziest day, to be honest. I posted it on Instagram first, and that's how people knew that I was there. And some people were actually waiting at the exit to talk to me. And they said, hey, I saw your car standing outside. And I was like, yo, take it easy. So that's also quite cool. It gives you opportunities. You can do stuff that others can't do. That is a surprise, and you're happy that you can do all that cool stuff. You can build a company. You can, well, actually try to make an impact the way you think is the right one, right? That's why you're doing what you're doing. You can drive cars you like. It's all changing, and you have to adapt to it. And at some point, it becomes natural.
Talking about the finfluencers and all the things that you just mentioned, I think it's very interesting when you look at the way people now invest. The TikTok advisors, to say, are the ones giving financial advice indirectly, even though they're not allowed and they say they don't give, but they kind of influence people's choice and trades. So all those consumers that are not equipped with the right tools to go on the markets, to invest, but not even to talk about trading, are basically driven by that generation that you just talked about, the finfluencers. I didn't even know it was a thing now to call it this way.
The AFM invented this word.
Oh, yeah. Oh, wow. Okay. Well, there you go. And I think they issued a warning recently. The AFM, so it's the supervisory authority of financial markets in the Netherlands, and they, I think, issued a warning saying that they're very, and as they are very frequently, worried about the fact that consumers are in mass entering markets, and those influencers, of course, giving sometimes too much of a kind of like expectations of gains, right?
I mean, it is like, where's the actual limit? So if Elon Musk is saying something, he's doing the exact same. If Mark Rutte is saying something about X or Y, he's doing the exact same. So it's not bad to have an opinion about anything that's financial. However, people are using it in their own advantage to take profit out of that for themselves. So if you're just saying scenarios about the markets, or you're actually describing it with argumentation and just be relatively political about it, then that's fine. It's ethical. But if you're going on Instagram and you have got a following of people between 12 to 18 years and you say this is going to be the next Dogecoin, it's called Elon Mars, yeah, then we need some more boundaries to actually defend our customers, right?
Mm-hmm.
That's why the AFM, I've been invited to them too. They are investigating on how can we actually limit people or make them more aware of these impacts. Because people will take advantage of them, and we have seen numerous examples of people pump and dumping on their following, etc. So it's new, it's not bad, but we need to get some limits in that space to actually make it work for everyone.
Mm.
And TikTok investors are just crazy. It's funny, I went to a school and I was doing some classes for 14-year-olds. Some of them were into crypto, and I asked them, where do you get your information from? And they all answered TikTok. So it's very easy to access, but it's also easy to access for young people, which gives them opportunities, but gives them also potential
Scams.
Yes.
Yeah.
Mm-hmm. And
So you are actually on board on because I was driving here and I heard that the AFM, so the Dutch Monetary Financial Authority, is or Financial Market Authority, is they only have a staff of about 600 people, all included. The Dutch financial markets are huge, so if they are now trying to regulate finfluencers, that is really something I guess it's not for the how do you call it? It's cosmetic.
Mm-hmm.
It's not really, and
But it's really complex to do so, right? Like, what's the actual limit? What can you say and what can't you say? What do you need to actually say something about the financial markets? Where's the limit?
yeah,
You
that's
can't define that.
exactly.
And they also have to make rules for crypto, which is still not the case. It will be in a few years. There will be you have to get licenses because of the new implementations in 2024. But how are they going to do that? Like with 600 people, it's less, but it's also such a complex story. As in, you can't define the limit of what you can or can't say.
mm-hmm.
Yeah,
So-
I totally agree with that, and I also think that even though these young kids are TikToking their way or YOLOing their way, their their pocket money, they also, because we and I think that's a nice nice next question also. These kids need to know how to invest, because we are in a monetary situation where either you invest or you die, right? It's not physically die, but your wealth dies. So I feel, well, first of all, I want to know if you agree that we have come to the situation where you need to invest or you'll just stay behind. And isn't it then very good actually that people have a very low there's a very low boundary where kids as young as 14 or something can get into contact with influencers, also recognizing at that young age what's good, what's bad, how to do Dior, and well,
It's kind of like that's a ton of questions. As in, we are definitely in a market where we reach rocket numbers of inflation. I mean, the last numbers are 5-6% as well. So that is definitely the outcome right now. So we are living in a market where you have to invest. However, are we actually getting into such a market, or have we been in such a market for the past 30 years? But it's just getting the entire society is currently getting in that acceptance, or they start to understand that they have to invest. Like the best moment to start investing was 20, 30 years ago, or actually maybe 40 years ago. That was when the big players started investing because they knew we were into an inflationary system. Nowadays, investors might be too late. So I've got some, issues with the fact that everyone is currently investing. Those are people that should not be investing at all. They don't know anything about it, and that's why mistakes are made. And usually when majority is investing in anything, you are actually too late. And nobody wants to be the last buyer. We've touched on it in the pre-conversation, but you don't want to be the last buyer. When it comes to those kids, I like the idea of them investing or starting to invest and investigate into doing something with their financial situation. That is great. However, they are not able to define what is right or what is wrong. And because of that, people will try to take advantage out of it. And that's what you get nowadays. People will try to pump and dump on their following because of the fact that they don't have the acquired knowledge to make a proper decision ethical. So in that case, I think we need to get more information on high schools and all those schools to actually inform them what the risks are, how it works, instead of telling them about economic models that we don't use anymore. People should be taught about money and the decisions that they make, instead of going on an internet where they can have 99 mistakes and only one right decision.
Yeah. But it's just telling about the education system as a whole. But to come back now a bit more on the way the markets are structured. So we just said from 2017 to 2021, a lot of things have changed structurally about the markets. We are about 2.5 trillion market cap compared to top. I think it was not even 1 trillion, was below 1 trillion, was half a trillion in 2017, if I'm not mistaken.
I don't know.
I don't remember, but it was much less. But then also we have a lot of new things arriving. So you just mentioned all those things. But what I'm also really interested about is the way, for example, now the exchanges also have developed more product offerings. We have futures. We have much more different ways of trading, and also with leverage. And this is, I think, also linked to talking about, let's say, risks that are enacting or at the origin of consumers, right, that make bad decisions, that cascades down into the markets. Is, for example, that the last week crash, and we've also talked about this in a pre-conversation, is that all those are possible because of this highly leveraged services that exchanges provide, up to 100 times the amount. What does it tell about just the healthiness of the market at this point, and the volatility in general?
Oof, that is a difficult one. I think that if a market is growing the way crypto has been doing, at some point the volatility will be killed. It will be less. However, you should be looking at what is actually impacting the prices nowadays. In 2017, we just had spot. So just 1x. We could just trade with the money that we have. So the crashes were less than what we have right now. The reason for that is that the markets are a derivative-driven market, meaning that all those financial instruments with leverage are actually pushing the prices way higher and way lower than everybody wants. So on those altcoins which are illiquid, they have created financial instruments to make more money for themselves, so people can gamble on the outcome of where the price is going to go. And in the end, the price drops from, let's say, for Chainlink from $26 to $5 within an hour, just because of illiquid order books. So we are trying to go from a spot-driven market to a future-driven or derivative-driven market. And I think those wicks are just a side effect of having all those financial instruments without having the institutional investors in the markets yet. So in the coming years, we probably are going to adapt towards a institutional investor-based markets or driven markets, in which ETFs and all those financial instruments that they use are going to be the key leader of the markets. And then the volume and all the liquidity will be different, and then the volatility will slowly drain away. That is in the end how the maturity of a market goes.
As of the moment volume comes into the markets, volatility decreases over time.
In the end, it will. It's the same what with gold. If you go back in the day for gold, for instance, the volatility was way higher back in the day, percentage-wise. And now the volatility is just gone. It's quite stable, as in the volatility is not 30% on the day.
True. True. So actually what I think you're trying to say is, as soon as, for example, the market cap of all cryptocurrencies reaches, I don't know, 20 or 30 or 100 trillion, that's when we will see this market mature. There will be so much liquidity in the markets that even derivative products might be able to function without, well, these super destructive wicks in a downturn.
Yeah, I mean, the structure is just way more skewed towards the financial instruments on crypto exchanges nowadays. And that is, they've not been thinking about that efficiently. As in, we saw it last week. We saw a crash happening. How did that happen? Well, through leverage and the fact that the liquidity is just too less to actually keep that one on level. So at some point, it just starts to nosedive. And there is no bottom until we reach a certain level where we've got big orders. So the liquidity and the efficiency is just not in the markets yet. But the moment that institutional investors are coming into the markets and they get products to trade the cryptocurrency markets, those will be the actual leaders of the markets and moving the markets instead of a crypto exchange.
Yeah, and then we have to add on top of that, if you want to compare to any other market, maybe Forex would be the most comparable, and I think we also talked about this before. But the fact that it's a 24/7 market as well influences this whole basically activity and volume and the volatility in general. But also the fact that we have things like stop losses, and I think you two had the conversation about this in Dutch, that people that automatically put stop losses creates a cascading effect that influences the prices in ways that, and I'm, let's say, not a pro trader or whatever, but sometimes I see candles, I'm like, what the hell? This candle looks just so odd. Mm-hmm. Like you have this huge red candle that's being eaten up again from basically the buying, people knowing and buying the dip, because what I guess is happening is
just algos. You can't even buy into such a wick. It's just an algo doing it.
Yeah.
Those are the big traders. But what did actually kill the market or make it so volatile is not because we have stop losses and leverage. It is that every moron can use a high number of leverage. So if you have any dude with 50k in his bank account, he can trade like 5 million if he wants.
Yeah, it's giving 12-year-olds AK-47s and say, no, go play.
Exactly, but then in the financial markets. Yeah. So in the equity markets, we are regulated. So only professional traders can use a high amount of leverage because they use it for hedging or building their positions, etc. They've got options, which we also don't have. We actually do, but not really trade it too much. But every, imbecile can use a high number of leverage, which is creating, and it's also fueled by social media, which we have been touching previously in one of the other podcasts, which means that most of the people are using that, and that's why it cascades so fast.
Yeah, but also linked to the fact that people are desperate, because we're the generation of you will own nothing and be happy. You will not afford a house. We're not affording anything, especially our generation. Bart, you're a bit of a generation ahead of us, but it is kind of like
old
this
guy in the room.
It's kind of like a cowboy attitude. It's like kind of go poker all in. Kind of it's like F it.
YOLO.
YOLO, and I have nothing to lose because I just literally don't have anything, and I don't have a family because I cannot afford a house, and so on, so on, so on. So that's even exacerbated even more. It's like the bushfire, like really rapidly expanding and exploding. Don't you agree?
Yeah, but now you can see limitations coming in already. In the UK, you can't really use some exchanges to trade high leverage. In the Netherlands, you can't use Binance, or at least not the futures anymore.
Can I withdraw?
Yeah, it's a shit show, but you can't use futures, you can't use margin on Binance anymore in the Netherlands, and I think it's only a good way to do so.
Yeah,
people should not be using that because it's just a gamble.
Yeah. Now let's see, because we just mentioned it as well, is ETFs are coming in. I think Q1 we can expect some big institutional money that can finally see financial instruments where it's investable. for them. And thereby, and I think also like I've heard this Raoul Pal having his conversation with Ash Bennington on Real Vision, is that this wave will fuel the next leg of the run, because we just started this conversation with thinking, okay, where are we in the cycle? There's this chart that I've just showed you before, and that you will see if you're watching this video, and if you're listening to this as a podcast, you can watch the YouTube video. But the graph of the bull run of what we had like so far, so basically 20 until 21, 22, superposed to the 2013, 2014 run. I think it was 13, 14 or 13, 14. And it's almost like clockwork, kind of almost to the
It was.
That was kind of like your comment when I brought it up. So why is it a full disconnect? Do you think it's not matching anymore, or is it just a different type of moment in the market?
Like, cycles move in the same sort of manner. There are always similarities. If you copy paste the current cycle or the 2017 cycle on the .com bubble, they move the same way. However, the length of the cycle is going to be different. When markets are maturing, the cycles will take longer than the previous one. The bull cycle will be longer than the previous one, at least. Like right now, we are in a phase where we simply are confused about where we are. Some people might say, hey, we've topped out, so we are in a bear market because of the 4-year cycle. But are we actually seeing a 4-year cycle? I disagree. I think that we're just seeing lengthening cycles. We touched on it in the pre-conversation, but 2010 to 2011 was 1-year cycle. Then 2011 to 2013 was 2 years. Then 2013 to 2017 was 4 years. And now, if you look at on-chain data, and if you just look at what is being developed still, we are in the middle of a bull cycle. So all those comparisons are in some way agreeable, but they are just on a different scale. So maybe we have to use log scale, or we have to use Fibonacci or whatever, but they are just longer in time. So that's why, where are we going from here, or where are we? Well, in the middle of a bull cycle, where are we going to top out? You don't know, because other factors are going to make a decision or make the market decide where we're going to go.
Well, the market has, of course, changed radically since the early days of cryptocurrency, where maybe one of the factors, and I would love to have your opinion on it, is the participating public, where in 2011, 2013, when we first got introduced into cryptocurrencies, it was just a really tiny public, a couple guys who knew what they were doing, investing something. Some of them became very rich, others got wrecked. And now we are in a totally different cycle where, well, even these 14-year-olds get their financial influence by looking at TikTok. Is that something that might be one of these factors that could lengthen those cycles, the participation rate?
Well, I mean, I guess 2010 to 2013 was primarily just crypto geeks, tech nerds, and all those like conspiracy theorists probably who were investing into Bitcoin and crypto. After that, you've got a retail phase in 2017 with the ICOs, and everyone was trading crypto. Now it's a little of everything, but I think the core focus should be that institutional investors are primarily diving into the market, and they create financial instruments for it. But you can also see that they are in the VC rounds for projects. So 1inch is getting a fund of 185 million. FTX with Alameda, well, that's one of the biggest ones. They are jumping into the markets. That's why the mechanics are getting different in the markets as well. Because if an institutional investor dives into crypto and has an allocation towards crypto, they make different decisions than Henk and Ingrid, who just purchased a little bit of crypto and have a retail decision to make. So that's why the markets are going to behave in a different manner, because of a different group of investors jumping into the markets. I think that this is the institutional investors phase.
Yeah. And then you also see like the fact that we have, and that's again about the structure of the market, the inflow of fiat, let's say, to crypto was much more different than the one you see now. We have much more volume. I think the total value locked of some networks, if you look just at Ethereum itself, is, I think, 250 billion or something like that, like crazy sums. I'll put up a chart on that, like where we can really see like the whole sheer volume of that, but also the whole like the whole ecosystem, right? So we had already DAI, so some stable coins already back in, I think it's already started in 2016, 17, the emergence of it. So where people actually put their profits into stable coins, so that stays into crypto. That doesn't go back into a checking account or in a bank account. Then you have the indexes as well. You have plenty of indexes. Like if you want to invest in the metaverse, you have like indexes for that. You have indexes for DeFi projects, like all kinds of indexes. So that's also being built up. And then you have like staking, and you have like also all kinds of saving accounts. You have like all kinds of cashback programs, all kinds of things that make the value that is being brought from fiat to crypto stay in crypto. And thereby any, let's say, liquidity problem or pool that we've seen in 2017 is hindered, is like much more slower at least, or it's just very big compared to it. So less likely to cause a big fundamental crash, right?
Yeah, plus if you join crypto, you can stay in crypto and live your life from crypto. That's also different than in 2017. You could still do it in 2017, and there are examples of it, but it was way more complex. Right now, you can just trade crypto, put it into a stable coin, have staking while you're just buying something in the bike or with a debit card. So you can stay in crypto if you want to. And the mechanics are also different. Like in 2017, if you wanted to purchase some altcoin, you wanted to get Bitcoin first, and then you can trade altcoin. But now you can use a DEX, decentralized exchange, and just swap your Ethereum for your altcoin. Or whichever pair you want to do, Matic on DEX on Matic, for instance. So the it's getting way broader, and it's getting an ecosystem instead of just one project doing nothing.
Yeah, a whole whole monetary system. Like that's the whole aim of this podcast.
Yeah, and also just to perhaps strengthen that argument is we've seen. In the first leg of cryptocurrency, we've seen how hard it was, and nowadays it's becoming easier and easier. But what does that say about the future of cryptocurrencies? When will, because I've had these discussions with a couple of people that say, well, when will I be able to get into cryptocurrencies? And these are people that they have a credit card, and they have a smartphone, but their technological illiteracy rate is quite high. Do you feel that the near future will include these people as well, or do we have to wait a couple years?
Technology is always accelerating, right? So I guess the adoption of those people will probably go quite fast. When? I don't know. And I think it's different layers. So buying Bitcoin or buying crypto is very easy to do, very understandable. But staking or using it on a debit card is still very complex. And what you see with all those platforms, they are building a UI that is very easy to use for you as a noob. So it's very easy to click on it. You can just stake it somewhere or use it somewhere into a wallet. And that is being built right now. If that is fixed, and you can see it in El Salvador or in all those countries having issues with their own currency, the adoption just explodes. Because why would you want to stay into your fiat currency if you can just stake it somewhere else and get 8% API?
Yeah,
and you can still use it. And
adjustable API.
Adjustable, yeah. But if you can do that and you can transfer it to the other side of the world without a bank saying anything to you, way easier, decentralized. You can use it anywhere, everywhere you want. But the issue we have right now is that it's still very complex to actually use MetaMask or whatever you have to use for those layer ones or those platforms. If that button is fixed, or that one is making easier for my parents, for instance, or anyone not common to crypto, that is where the acceleration starts.
Yeah, but there's also recovery, right? There's also now we have like you can have different people confirming like through, for example, signatures or like recovery of keys and these kind of things, or Casa Huddle, that is a whole system based on basically storing cold storage of your crypto assets, but it's still very zero. It's binary. If you lose it, you lose it. If you have it, you have it. But there's no in between, like like calling your bank and these kind of
It's the
things.
same as internet, right?
Yeah,
In
but
the beginning, it was so hard to use for
yeah,
the
but
elderly people.
look at where when you look at the way internet progresses, that at the beginning everyone was feeling, oh yeah, it's the freedom and interaction and everyone can connect to each other, but now it's basically all kinds of little echo chambers and walled gardens where like the Facebooks, the Googles and Microsoft and whatnot, Amazon have a monopoly on it. And this is of course a recurring conversation. Is this going to happen to crypto as well? Right? You see Binance is a centralized exchange that behaves like it says that it wants to be decentralized, has an impressive amount of users. And he says, so CZ says he doesn't care about money in interview. I might believe him on that, but I think where he really cares about is his ego and influence and power that he can have on an ecosystem. And the fact that you can stake and do all those things, and it's like a giant casino actually when you really want to look at it this way, is that through the easiness, and that's the respect that they are given to, the easiness of the UX, the user interface, the whole experience that they created on Binance is really respectable, but with the price of basically creating so much dependency on that. And a huge, it's a behemoth, right? Like it's from a sheer volume perspective, it's surpassing even one of the biggest banks combined in terms of just volume. And
Coinbase the same
thing. And so those are the banks maybe of the future actually, because they hold the wallets and the accounts in a way of those things. But what I want to get to is the centralization of those entry points. And if they are going to decentralize one another is a different question. But just like the internet went from decentralized to centralized, crypto and blockchain can just go the exact same way.
Yeah, on many layers. I mean, centralized exchanges are growing quite fast. But what we all, and that, like with centralized exchanges, you have got KYC rules right now too. So the government knows already more about the actual crypto that you hold. So
yeah,
you've
definitely
got more limitations to actually trade crypto.
Yeah.
What is also accelerating right now is DeFi and DEXs. So the usability of a DEX is way easier than when Ether Delta was around.
DEX is decentralized exchange.
Ether Delta, man.
There's funny stories about Ether Delta.
Oh,
if you had a sell order and you typed it wrong, it didn't take out the actual market price at that point. It just took out the price on the level where it was. So it skipped the entire order book and it took it out there. So that's where DEX started.
Okay.
But that's also getting easier right now. You can see the TVL increasing heavily in the
Total
DEX.
value locked.
Yes. You can see that increase heavily in the decentralized finance world and also in decentralized exchanges. So people are using that way more. But the funny story is that with internet, they said, okay, it's going to be free. Everyone can use it. You can connect to anyone, which is, as a matter of fact, true. But privacy has been limited since internet is there, because you're easy to follow, easy to see what steps you make on the internet. With crypto and blockchain, and the government already starts to investigate that way more, even your financial decisions are easy to track. So your privacy is getting way more limited.
Yeah.
Which is the flip side.
What I actually, and we're going to talk about flipping later on as well, but what I actually wanted to confirm to you is that even though Alexei has a worldview that we were decentralized the internet and we are now centralized, and of course I see there's risks in centralized exchanges. I don't have a Binance account, so there are ways to skip and go to DEXs. I really feel that it is your own choice. I feel that these centralized exchanges are a very good way to incorporate most new users, like you said, making it easy to to take part in the crypto revolution, but I also feel that there are enough chances or ways for people that want to protect themselves or don't want to be tied to these centralized exchanges to, for example, use DEXs. And going to the part, and I want your opinion on this. We getting your coins off and stored in a hardware wallet is still quite complex process for most people, most users. Isn't it good that some of these centralized exchanges, being new banks, could perhaps in a staking form offer this to their customer base in the form that, well, you have a joint account, you have a savings account, you have a checking account. Isn't it good? Could it be good that these centralized exchanges take over the role of banks?
Whoa, yeah, I mean, definitely. However, the ultimate question is, do you want to save or have your crypto at such a centralized party? That is the ultimate question that you have to answer. Is the majority looking for that if they want to have crypto? And I guess the majority is actually looking for such a centralized solution, as in fully decentralized is not gonna work too. That's also with politics. Like full left, full right doesn't work. It's always somewhere in the middle. So Amdax, Dutch party, is trying to do that first for the high-end customers, in which the hurdle people have to take is, okay, I want to invest in crypto, but I have no clue how to save it. I have no clue how to purchase it. If there is a third party that is taking care of that all, insurance, that's the best way to invest in crypto. And I think we have to define that as well for the low-end customers or retail customers. How? I don't know. I mean, it's a very complex one. Do you want governments to step in? I honestly don't feel like comfortable by having that, because then we're just recreating what we have already. But how are you going to find a solution then? I don't know. Multi-sig. It's going to be very complex too. I mean, in the end, people want to feel secure, and people don't really want to hold those cryptos themselves because of the risks involved. And because of stupidity, people will just lose it all. So having a solution where, decentralized or not, where you can just have multiple accounts, but also if you want to get a mortgage, you can just show all your numbers that you have, and automatically you get the best solution for that. And you click on a button, done. That would also be a massive step forward.
Now talking about a different type of topic, because that's kind of also dominated the year's NFT booms. So to me, it reminds me of the ICO boom, but now just like all over like now. What's your take on that? And do you own NFTs? Do you have a portfolio of NFTs as a trader? How do you see it?
Well, NFTs, I feel like I've missed that entirely.
Okay.
So I like NFTs are here to stay, definitely. But the same was said about ICOs in 2017. They are here to stay, but they will be different from here onwards. It's the first layer that we're seeing. So the technology of NFTs definitely will stay around, will be the next layer on DeFi. But having a Bored Ape or a CryptoPunk or anything that is just a picture is just reminding me of the fact that we had a ton of ICOs in 2017 which went to zero.
Yeah.
So I don't have any of those, but I will definitely buying NFTs if the bear market starts, or having projects that are into the NFT space. And the same goes for Metaverse. Play to earn concept, which is currently getting the actual hype. Great that it gets the hype, but it's just the first hype. I mean, nothing is really built. If I see NFT projects or play to earn games right now, they have the user experience as in I go back to Windows 1995. And I don't really have any, I can't see anything, I can't do anything, but they still get raised they raised $10 million for a project that will probably fail. So there are many similarities with 2017, but are they here? Yes, but why should they like if Decentraland has a VR or a Metaverse, why is that one going to stay and why is not Apple or Facebook or Google making one themselves. Which one is going to be the big winner? We don't know. So it's quite tricky to have an investment thesis on those.
And do you have a take on, let's say, because you have a certain portfolio of coins you trade, do you also have a portfolio just for, like, let's say, just metaverse? Do you have a portfolio for meme coins? I guess you don't trade meme coins like Shiba or
Just
Doge or...
Shiba is the only one I trade, but that's just pure day trading as it's on.
Okay.
You've got data.
And how do you day trade the Shiba?
Just the same as everything else, just pure price action. It's actually funny, you can just trade it.
How? Because I thought, I mean, it's
on Binance, for instance.
Yeah, no, but how would that? Because it's so highly volatile, and it could be a fraction of information that just makes it move like drastically. So how do you trade
it's already valued at like 20 billion nowadays.
Yeah.
So the impact of one will is diminishing over time then too. So it's getting quite pure price action right now, which is tradable.
True, but the weakness of, and that's a part of the trade I want to know, is because those people owning Shiba are not your average professional crypto traders. There are newbies. There are people that just are driven by memes. There are people that just want to have fun. I don't know. Like, I don't even know who.
Or
what
very
kind of people.
experienced traders.
Or those, but they're
Like,
they're
if it's
the.
on
I think you're part of the small minority. I'm guessing here that actually knows how to take advantage out of it without being burned.
Yeah, but that goes for every asset.
But why would Shiba be different?
It's
not different. Sorry.
It's not. It's just a regular asset that you can trade based on historical price action. That the moment that you can get data based on price action, it will be traded because of markup psychology and because of reference points that traders will use.
Yeah, but look, if on Ethereum, very simple, Bitcoin, if let's say El Salvador adopts Bitcoin, it has an effect on the price or not actually. Then Shiba having nothing to like. Elon Musk mentioned Shiba, or this influencer mentioned Shiba, so it's about influence here. So
No.
the nature
Influencers are moving it, aren't moving it anymore.
Okay, anymore maybe, but
It used to be in the beginning.
but so my question here is really like, where does the price action come from?
Well, from volume and from liquidity. So price action in itself is made out of decisions that traders are making at a certain point in time. That's why you get those candles having a certain trend.
Yeah.
And because of Shiba being so big right now, the impact of influence is close to none. And the impact of traders trading at certain reference points in the chart is quite high because of the volume involved in such an asset. If you go to Elon Musk, for instance, or Hamster coin or Mongoose coin, which is also referenced with the American Senate last night, those coins have pretty much no liquidity, no volume. So if they are being mentioned in the US with that event last night, yes, they shoot up. There's not much money involved in the crypto in itself, so that's why it's easy to move or manipulate those.
Yeah, but
Shiba used to be there in the beginning, and it's now so big that different variables are taking over.
sure, I understand that. That's, I think, pretty straightforward. But what I really want to get to is, how can a top 20 coin that is worth like billions have any decision on the trade of, first, it's not of even value, it's price, which is different. Because it fundamentally has nothing to offer, if I'm not mistaken. Or is there like any mechanisms in Shiba? Nothing, right? It doesn't. It's not capped, right? It's constantly like, there's no burning process.
Honestly, no clue, bro. So
Me neither. And please educate us.
I actually wanted to ask you something about that, because we have these meme coins, right?
In fact, you're trading, you have no clue. Just tell them.
I'm just trading the chart, man. Like
Yeah,
with that, I'm just trading. But when my portfolios, I definitely make a fundamental decision.
Gotta love TA.
But trades, I mean, if you talk to most traders, they just trade on PA, and then after they ask, "Oh, what was that?" Like, all right, crypto, cool.
Yeah. So what's your opinion on these meme coins? Well, first of all, I think they introduced a lot of people into crypto, but of course, most of those people got wrecked.
Yeah.
So do you see any should big exchanges like Binance allow these coins on their on their exchanges, because it seems like a cash grab, right? And Binance knows that, for example, Shiba has no intrinsic value. There's nothing there, but a lot of people want to trade it anyway, so they put it on a platform, and loads of people get wrecked. Is there anything that they should be held accountable for something like that, or do you feel, well, it's their decision and it's the customer's decision, retail mostly, to invest or not?
Yeah, that's a difficult one. I think we've got Dogecoin already.
Yeah.
Like that's the ultimate meme coin. And now we have Shiba and we've got all those copycats because it's so easy to copy an actual project or an actual protocol. So should the exchange be the gatekeeper here? Or should the government step in and become a gatekeeper with certain licenses that some projects should be having? That is probably the $1 million question.
Are these experiences of the markets possibly a reason for governments to say, well, this is not going as it should go, so we're going to step in?
Yeah, but that's also a question about like which projects should be listed and which shouldn't. Like if you have a copycat from Shiba Inu, like Floki Inu or Kishnu Inu, whatever dog there is, it's quite clear that it's a money grab, right? Or it's a meme coin. And when you have a project that is actually be making a white paper, has some serious ideas to do something about it, they are listed and then they dump everything and leave. Where are you going to make that decision? Or what are the key indicators to make a certain decision for the exchange? And why should the exchange make that decision? Or is the customer actually making the decision for themselves? That is a little bit of the fight that we're having right now. Or should the government step in once again and regulate the entire market? I think that's not the case. I think the market in itself will make solutions for the market to become more efficient and more appropriate for every investor.
Mm-hmm.
Which could mean that there is, purely based on price action, a market for meme coins, even though there's no underlying.
But it's the same with
real
those
value.
fan tokens.
Yeah.
Like we've got meme tokens, and then why would an exchange like Binance list Lazio fan token, AC Milan fan token, United fan token, whatever? What's the purpose of that being tradable on a centralized exchange? Like the only way you're doing it is to trade and make money.
Yeah, and
they go up when there is a match. There's no real point. They go up when there's a match. You can't do too much with it. You can vote in the club for some stuff like which color is this car going to have. But should that be on an exchange? No. Those tokens should be given out by the club itself. And then maybe inside the club you should be trading them towards other fans. But they shouldn't be on a centralized exchange, but still they are.